Sunil Subramaniam also joining us this morning. Sunil, let's get you in and kickstart, of course, with with the big the stock in focus this morning. There are two of them with Reliance. Let's start off with Reliance and get your views on the AGM yesterday. As Nikunj just said, tossing the ball right out of the park. An AGM complete with Mark Zuckerberg, Sundar Pichai, big plans for the future. Let's just first talk about Reliance and what you made of some of the commentary there.
Well, I can't really speak stock specific, as you know, right? Regulations don't allow me to do that. So I think it's basically in the sector. And I think that ultimately, while everything was positive for this company yesterday, so I think that given that India is a 2 or 3 player market, and given the size of a market, I think there's adequate space for all the three to benefit. Yes, there will be readjustments of market share. But I think that if you look at the other two companies, they have international banking. Singtel backs Bharti Airtel and Vodafone UK backs. So it's not that ricocheting, and so the money is there, right? And India is a big enough market. That's why Google has made such a bet. So I think the market is large enough for all the three players to benefit. While one may take, I think the early mover advantage will be competed away in time. So I think it's good to play the telecom story overall. I think for the reasons that Nikunj mentioned in terms of data usage, and that even auto rickshaw drivers, ordinary people are today consuming data heavily to watch, and whether it was due to coronavirus crisis or due to a change in the behavioral pattern, which I think you should give credit to Jio for introducing this 1 GB per day kind of a thing, which made everybody consume movies and TV shows online. So I think fundamentally 5G is going to come. And while it may not be a FY21 story, I agree with Nikunj on that. I think that the markets want to see if it's an FY22 story, the markets aren't going to wait till next year to discount that. So I think it's the progress on the 5G. If the government gives an indication that next year, and the government, bear in mind, income from a 5G auction is absolutely crucial in this year of fiscal deficit challenges, right? So I think that I'm not so sure that India may actually fast track, and Mr. Modi and Sundar Pichai's conversation might have covered, the speed at which India will open up to 5G and all of that. And I think it's a huge opportunity for India here because of the anti-China feeling which is coming from UAE and others being banned. So I think there's a lot of opportunity and potential in the whole sector, and I think the whole sector is a good buy. Not necessary that it has to be company specific.
Absolutely. And Nikunj, Sunil really hit the nail on the head that the market is not going to wait to discount it in FY21 or 22 whenever the 5G spectrum bidding actually starts. And, while there is no doubt that you've got to be in the telecom sector because this is a raging bull market sector or current market sector, and this sector is here to stay for the longer term. But I think as investors, the call you need to make is, how do you want to play the telecom sector? Is it going to be via someone with deep pockets like a Reliance Jio, or is it going to be via Bharti or an Idea which are going to struggle to fill up their coffers for the 5G spectrum because they're already dealing with the AGR dues? And also, Nikunj, it's a harsh reminder as to how capital intensive this sector is, and these spectrum upgrades with the way technology is moving, without even blinking, these Capex requirements will come in more frequently maybe in the near future.
That's the nature of the business. I mean, this is not FMCG company, even though the consumer connect is there in terms of where they are able to, offer a service. Life without telecom is impossible to imagine. Life without electricity is impossible to imagine. But those are utilities which do not give you grand returns. The difference in utilities is that they give you strong dividend yield. Telecom companies may not give you strong dividend yields. I think for me, the way I look at telecom sector, Aisha, is that large part of the market share and the mind share will just be dominated by 2 players. Within that, if you're choosing Reliance, well, then you're choosing a conglomerate. You're choosing a company which is a digital platform. It is morphing to be a digital platform which happens to give a voice service. With Bharti, if you're buying Bharti, you're taking a bet on the fact that rates have bottomed out. They will continue to offer better service. They've got a Singtel-like player who will keep their fund requirement intact, and it's a pure play on the assumption that a data binge will really give them some kind of an operating leverage benefit. So what you're actually buying, Bharti, is with an outlook like you buy a commodity stock. The demand will come back, operating leverage will come back, and operating leverage will make your numbers look good for next 2 or 3 years. With Reliance, you're buying a completely different game. I mean, you're buying a partnership of Jio, Facebook, and Google, and with the assumption that they're trying to create a modern technology or a modern platform. See, Aisha, Manish Chokhani gave us a great example, which is that if you bought, let's say, a simple business where market share gains were there, then you hit a jackpot if you bought private banks a couple of years ago. If you bought the simple assumption that, unorganized market share will become organized market share, and if you bought a stock like Titan or for that matter, any of the branded players, you've really done well with the Britannia also. Now the trend, I think, it's modern monopolies, and modern monopolies are platform monopolies. Reliance Jio is becoming a platform, and Bharti will never be a platform. I think that's a big difference you need to optically imagine.
Yeah, absolutely. You said it right. Okay, that's that on telecom. But Sunil, it seems that IT has managed to cash on the COVID opportunity. I was just looking at Infi's numbers. It's a solid 44.5% contribution that the digital revenues have in the overall revenue pie. And going by the management confidence, the fact that, at a time when most companies don't have any visibility, they've managed to set out a guidance, and a good one at that, seems that they have clear visibility on the path ahead. Having said that, do you think that you need to really tamper with the pecking order within IT? Is it not going to be TCS anymore, and does now Infi take the top spot?
I'm not sure. I think the space is big enough for everybody to play. And I think that between these two companies, both of them carry very strong relationships with their buyers. So I think relationship counts for a lot. The speed with which you are adapting to digital, cloud, the Internet of Things, I think both are there in that space. One quarter, this may be up, one quarter, that may be up. But I don't think, and just like telecom, I'm just saying that even this is a big enough market. And actually, the funny thing is this COVID-led recession in the international markets is actually going to be beneficial here because lots of cost saving, lots of new ways of doing business, shifting to work from home, need for dynamic IT management necessities. So I think there's a huge opportunity here for the entire IT sector, and I see both the leaders here getting good market share and gaining because of the strength of the relationship. They have multiple fingers into their customers' pie. They're handling a lot of stuff for them, and so I think both are smart enough to get onto the digital cloud, and with the 5G thing coming up, everything is going to get that much faster and that much easier. So I don't really see a need again to differentiate. Again, I differed from Nikunj in the previous one. I think you can play the sector. I think here you can play the top 2-3 players comfortably without needing to really need to choose. I'm not denying that one quarter somebody will report a better guidance, that's okay. But you take it over a slightly medium-term outlook, I think there's enough space, both have strong relationships, and both will benefit from the new world order that COVID has introduced in the both developed world and in the developing world to some extent.
Sunil, there are a lot of PSU stocks which are available at dividend yields of 8-9%. I was looking at something like PFC yesterday. 10% dividend yield. NTPC, great dividend yield. SAIL, okay, they are a commodity company, let's keep it aside. But BL and BML, what is stopping a value investor like yours or a value dominated fund like Sundaram taking big bets in some of those businesses?
Well, you asked the question, luckily for me as a mutual fund, because as an investor, that would have been a different answer. So as a mutual fund, I am today building wealth over 3 to 5 year period, right? So I need a stock which is going to be a multiplier, a compounder. If I'm getting dividend yield, I'm going to be able to pay dividend. But today, thanks to the taxation rule, dividends are no longer a way that investors incrementally will choose to invest into mutual funds. Because the 10% DDT was there, that's gone away. But now you're going to get taxed at your marginal rate. So I think the whole dividend play from mutual funds is going to come down. It's already started coming down. We can see a lot of our investors switching from dividend option to growth option within the same fund. And so I think the receipt of dividends means you're getting cash back. and that stock, right? That dividend play is not going to help the long-term wealth creation. So I'm not sure that, so for a value fund, dedicated value fund, also that value fund is, what is it saying? It's saying something is beaten down on price to earnings, price to book, and I will create wealth for you over the medium term. This whole concept of dividend being a value, that's an international play. In India, India is a growth market. People come to the equity markets for growth. And I think that the traditional and reason PSUs have high dividend is because the government needs money. It's simple as that. So it's actually bad news to me, to those sectors. They need capex to invest in. There are short-term decisions being taken by the government saying, no, pay me the dividend today. I've also taken away DDT, so it's good. Give it to me. But that's not good for the long-term health of the company. So I have a contra view on this. I'm negative on the PSU sector. I think that capex decisions should take priority over owners' need for cash. And clearly in the PSUs, especially this year, as I mentioned in terms of the stress on the fisc, there's going to be pressure to pay more dividend, but that's destroying the value. And ultimately, if you look at the whole Miller-Montanelli theory, right, dividend versus reinvestment, right, ultimately it's about the market play. And PSUs, thanks to the whole strategic concept the government has brought in, allowing the private sector to enter pretty much every space there, PSUs are going to find it tough from an efficiency perspective and from a need for capital perspective. So tough times ahead to government to decide on a particular PSU in a particular sector, saying, hey, you need this capex to compete with the private sector, or I need the money more. So I'm not sure that cookie will go the right way every time. So I am not so bullish on this PSU sector, and those high dividend yields are, like I said, off the thing. They are not. So other final point, even if the company is taking the dividend decision, right? What does dividend tell you? Dividend is telling you that I don't have an alternative wealth creating investment opportunity in my company, hence I'm giving it back to the shareholder. I think that's the symbol and the signal. I think individual investors who want regular dividend, they know the government is going to get, can look at this and say, okay, I'll get some regular income from me directly investing in those stocks. But that's a call specific to an individual investor. As a mutual fund, I don't think that this kind of an approach makes sense, at least from our perspective. And we are not buying into this sector in any big way.
Okay. Sunil, you've been long on cement for a long time. Your portfolio also indicates that. Any reason to believe that you've changed your thought there? Because construction activity has been slow, monsoon has come back in. We don't know whether the spike in cement which we've seen or cement prices we've seen is here to stay. Because I want to hear your view on cement, because your view on cement would be a view on economy also.
So we were already overweight on cement. So we are continuing to hold those positions, but at the same time, I'm not buying additional cement. Okay. So my view that in a 18-month time frame, right, I think the capex cycle will trigger based on the fact that capacity utilization, I think next year's GDP growth should be close to a double-digit GDP growth on a YOY basis. And that will lead to capacity utilizations rising from the current 69% levels to about mid-70s, and you will see capex from domestic players start. But at the same time, I think the China opportunity, which I've spoken about earlier, will also mean that you will see starting maybe end of this year, early next year, foreign players coming in and setting up factories, and so demand for cement will move up. This year, government spending on capex is definitely going to be less, so any cement demand from the government sector is not going to be as expected. So near term, yes, cement demand looks like it will be plateaued. To some extent, in the rural economy, we've seen that whenever they have a positive view, and which is the current view because the monsoons are good, kharif sowing is good, rabi harvest is good, they do tend to build their houses, the first floors, the additional rooms and all of that. To some extent, rural construction demand. Second is the Narega payout. The government choosing Narega, right, 40,000 crores of Narega, a lot of that will be done on work on the rural infrastructure. 1 lakh crores was put out on agri infrastructure in the Atmanirbhar program. So some amount of government spending, in the sense that to pay those wages, they need to give work to the NREGA employees. And there's a 40% YOY increase in employment demand on NREGA front. That has to be channelized into infrastructure only by the government. Government can't spend on anything else. So to some extent, these are counter forces. But yes, the slowdown definitely is going to affect the real estate sector, and no doubt that you don't see cement demand shooting up in the rest of this year, but that's not a reason for me to turn bearish. So I'm not selling off my cement portfolio. I'm holding on to it because there are good quality companies. Second is there is a certain amount of regional play in cement, right? So one is a view of cement all India, but in a regional sense, if you look at it, there are pockets of demand supply which come into play because cement, moisture absorption nature of cement means that transportation beyond 200 kilometers is a challenge. Second is that where the limestone quarries are there, you need to put your plant close to that. So given this kind of a scenario, I still think there is a smart regional play in terms of this where there could be opportunities. So overall, yes, I'm not as overweight as I was before in my view, but doesn't mean that I'm bearish. I think that the uptick will start. And typical, Nikunj, again to say the same point I just said a few minutes ago, is that the view of that cement demand coming through will be enough to get the market to start rewarding cement companies. The actual demand can follow a bit later. So the lead indicator behavior of the market means that I'm not looking at too far down the road for a cement demand to again look up and be positive. So I think that that explains the view on the cement.
All right, Sunil, thanks so much for joining us this morning and taking us through some of your current views on things.